You want to go long. You're looking at the chart, and there it is. A bullish pattern. Perfect. You're taking the trade. But hold on. Did you actually analyze that chart? Or did you just find what you were looking for? That's confirmation bias, and it's costing you money. Here's what's happening. Your brain reaches a conclusion first, then searches for evidence supporting it while ignoring everything that contradicts it. You think you're analyzing, you're not. You're cherry-picking. This isn't trading. It's validation seeking. Watch how this plays out. You want to go long, so you see the higher lows, the bullish divergence, the increasing volume. Trade confirmed, right? But you completely missed the lower highs. You ignored the resistance overhead. You didn't see that bearish cross on another time frame. All of that was there on the same chart. You just didn't look because you'd already decided what you wanted. Your analysis simply justified your bias. And here's the dangerous part. It feels thorough. You checked your indicators. You looked at volume. You drew support levels. But being thorough doesn't matter if you're only looking in one direction. You analyzed the bullish case completely and never once considered the bearish case. That's not analysis. That's rationalization. The devil's advocate technique. Before every trade, force yourself to argue the opposite side. Want to go long? Spend 2 minutes building the bear case. Find every reason not to take this. Resistance, weak volume, distribution patterns. Whatever contradicts your bias, write it down. This is mandatory. Why does this work? It interrupts your confirmation loop. Your brain wants bullish evidence. Fine. But force it to search for bearish evidence too. This creates cognitive tension. You can't ignore contradicting evidence when actively searching for it. If bearish evidence is weak, take the trade. If strong, walk away. Either way, you analyzed both sides. That's real analysis. Build this bias check into your routine. Add it to your pre-trade checklist. List 3 reasons against taking this trade, not 3 reasons for it. You've already found those. Find 3 reasons against. If you can't find 3, look harder. They're there. Every trade has risk. Every setup has reasons not to take it. Here's how to recognize when confirmation bias is operating. You feel certain. There's no doubt in your mind. The trade seems obvious. That's a red flag. Real analysis creates uncertainty because it weighs both sides. When you feel absolute certainty, it usually means you've only looked at one side. You're seeking validation, not trading. Watch out for selective memory too. You'll remember the trades that confirm your beliefs and forget the ones that contradict them. I knew that resistance would hold. Did you really? Or did you take 5 resistance trades where 1 worked and 4 failed? You remember the one. You forget the others. If you catch yourself cherry-picking, here's what to do. Stop. Before you enter, find one piece of contradicting evidence. Just one. Maybe it's not enough to invalidate the trade. That's fine. But acknowledge it exists. I'm taking this long despite the resistance overhead. That awareness changes everything. Here's the uncomfortable truth. Most trades have mixed signals. Bull and bear cases both exist. Confirmation bias makes you pretend one doesn't exist. But the bearish evidence you ignored doesn't disappear. It's still there, still valid, and it costs you when the trade goes against you. Build balanced analysis into your process. Give every trade 2 columns, bull case, bear case. List evidence for both. Then decide. Bull case stronger? Take it. Equal. Pass. Bear case stronger? Short or stay out. The key is you looked at both. Keep a bias journal. Before each trade, write your initial bias, long or short. Then build the opposite case. Write it down. After the trade closes, review both. Which was correct? If you only analyzed the direction you wanted and you were wrong, that's confirmation bias in action. Confirmation bias comes from wanting to be right. Your ego gets invested. But humble traders know they don't know what the market will do. It could go either way. They analyze both sides because they're genuinely uncertain. Certainty is ego. Uncertainty is wisdom. Here's your test. Next trade, before entering, spend equal time analyzing why you shouldn't take it. Can't do that? Confirmation bias. Contradicting evidence seems weak. Confirmation bias. Annoyed at this exercise? Definitely confirmation bias. So ask yourself, are you trading or just seeking validation? The difference is simple. Trading means analyzing both sides of every setup. Validation means only looking at one. Your profitability depends on which one you're doing. Analyze both sides, every single time. That's how you beat confirmation bias.